just going over to psychology. Now, to me, this is bigger if you're gonna be a trader. It might not be as big if you're a long-term buy and holder, but it can come into play. So, knowing who you are, what fear and greed. How do you deal with those emotions? Kind of what's your mental state? Are things pretty stable in your life? And again, because sometimes you have to make, it's not even sometimes, you have to make decisions as a investor, and even more as a trader. So your mental state, being in a good mental state of mind, is important, because if there's some life events that are pretty major that are taking place, it can affect your decisions. Are you a quick decision maker? As you see, particularly, and this is probably more for traders, but as you see markets turning one way or another, do you have the ability to make a quick decision, and in that, can you execute? Which kind of leads into the next one. So execution from a standpoint. Let's say, for instance, you're in a stock, and say you're in a stock at $10, and it dropped to $7 on you. Can you sell at a loss? Whereas I know, and it even happened to me, that I've been in stocks before, and they've just gone down below, and I just lost so much money that it actually paralyzed me, and I couldn't bring myself to sell. And it's weird. If it gets low enough, you will sell it. But sometimes, one thing I've learned that I hear people say, and it's a hard thing it can be hard to do consistently, but the better you become at doing it, the better off for your portfolio it will be. And that is selling losers quickly. Is like the quick sell is the easiest sell, and it's the less painful one. Whereas if you stay in it longer and it continues to go down, then it's just going to become that much more painful. And then I got mood, and you can just kind of maybe a little bit of repeat of the mental state, but just are you in a good mood, bad mood, whatever. Again, that can affect some of your decisions from a trading investing perspective. Any what do you all think about that, just in terms of some of the things that you all have? How does that play into your investing or trading decisions around just kind of your mental state?
Yeah, that would be a big part for me when I'm trying to look into probably investing, because I'm more so risk averse. I know that. Mm-hmm. So it's more so trying to look at different factors, look at the company, look at the different stocks, look at the industry, look at news, looking at different factors and whatnot for me, and then trying to make the best decision, and not always trying to make the best snap decision, just because I don't like to do it under pressure, depending on what state I'm in. Mm-hmm. When I'm looking into stuff. So I think I'm more so in the investing mindset of long-term payoff for me.
Okay, good. And I think that's really important. And if as you kind of have stated those things, Christian, as you know those mm-hmm. things about yourself, and if you can create if you can trade or create a trading plan that harnesses those attributes about you, that will be very good. Whereas there sometimes you will find that people get into it. Like, say for instance, if I had a trade that was going on, and I was like, and you looked at it and it's like, man, I want to get on that trade. But you see how I'm actually managing the trade, it goes kind of against your makeup. Sometimes you'll have to make the decision and say, hey, even though I want to be in that, I can't necessarily do it that way because that doesn't fit me. And I think the earlier you learn kind of what your trading investing philosophy is and find your niche, that to me that's gold, because once you find your lane and you can repeat it and you can stick to it and you know what your levers are, in it, it really helps to get some consistency, and it just works well with you, because if you are into something and you losing sleep and you worried about it, and you put more in it than you can afford, or or it's down a lot, and you really had that money allocated for somewhere else, it can be stressful. And so knowing your makeup and then trying to trade according to that, I think that's very, very essential. Now, but I also will say, kind of contrary to that, there are going to be some things that you're going to want to expand into, and as you grow, that you may have to increase different areas, or stretch yourself beyond maybe what you're comfortable with, to try some different stuff. So that happens as well. But if you find that you tried it and it doesn't work, then you can always go back to what works for you. So that but thanks for that feedback, and just keep that in mind, Christian, because I think that's going to really be helpful for you or anybody else.
Yeah, true.
Yep. Kyle, you got anything on the psychology?
Yeah. Well, you're definitely right about the whatever style that you go with is very important, because like you said, you're dealing with day trading or something like that, you're going to be more prone to, you got to watch the market more.
Mm-hmm.
That's for sure. And watching the market more is going to have you, making more decisions, trying to get in and get out and all that stuff. But once you kind of figure it out, 'cause I like investing better right now. I mean, I learned how to option trade, so I do like options trading. But I have to have that discipline and confidence, really, and have some serious winners there. But I've taken a lot of philosophies from different people, like Mike, Warren Buffett, some other people, and I kind of put them all together and I found a comfort in doing what I'm doing. And it takes time to get that discipline, to figure it out and have that confidence. And, I just studying the investment game itself. You got to get the education in. So that comes with the emotion that's involved and the decision making involved. And it's cool. I think the only thing like right now, getting those profits versus getting those shares, building up the shares, possibly getting some dividends. You got to know all of the above. Getting into something new. What we say, support and resistance. You got to know all that stuff before you get it, because it makes a difference when you get in versus how long you're going to be.
Mm-hmm.
Right.
But it's all good. Like I said, it's great. Once you get into it, I mean, when you talk to other people who's into it, it's a real cool group to be around. It's your mindset changes, the circle changes, and it's so cool to grow with it. It's so cool. And, like I said, it's a lot of the different forms of investing and trading. It's all, everybody's looking at a chart. That's what you really all have in common, is those charts, which is kind of cool too. Yeah. So yeah, man, I love it. My mindset and my I guess not getting off of this subject, but the emotion and all, it takes a little time. You can't get a little emotional, even long-term trading. You see something drop $3, and somebody, or somebody got some news out there that drops everything. That could get you a little worried. You might sell stuff, and you might get back in, because somebody's news didn't mean nothing. And I just did that with Neo. Did that the other day with Neo. Got one little bit of news. somebody said somebody shortened Neo, it go back down to 25 one day. Kind of got me spooked a little bit for no reason, and I sold my few little shares, and I didn't have to. I saw some other news that said Neo was like the next Tesla. So I'm like, okay, I'm gonna watch it. If it hit this, hit that, I'm jumping back in and buying more shares. And that was a good play. So you gotta do your homework.
Yeah.
You gotta be confident. Because I'm buying stuff that hopefully I can be in it 5 to 10 years. That's Warren Buffett. Don't buy nothing unless you think you're gonna be in it for 5 to 10 years. That's easy little thought process there. That's gonna definitely stop you from jumping in and jumping out.
Right. Yeah, I think I heard somebody chime in. Looks like Angela's on. How you doing, Angela?
Hey guys, how are you?
Pretty good. How about yourself?
Good.
Hey, we were just going through, Angela. We just kind of talking about a little bit about psychology. So, just fear, greed, your mental state, mood you're in, execution. Are you a quick decision maker? That's probably more around, trading versus investing. But just the psychology of investing and trading. We were just having some discussion on that. So I know that you have purchased some things, you've sold some things. So where would you say, how do you feel about the psychology of investing and how has it, played on your decision making?
Okay, well, I don't think that I as far as fear goes, I think that I operate with caution because I have a very diverse portfolio, and so I don't have like a lot of fear. I do try to be cautious. What I like is because of the fact that it's diverse. If I see something dip, I see other things rise. So I'm okay with that. As far as greed goes, I don't think I'm there yet because I'm unfortunately, and I say unfortunately because I would like to get to the point where I could buy more shares at a time than what I do. But I'm pretty happy with the results that I'm seeing. Like I may only be able to get, maybe 5 or 7 with my money, as opposed to somebody who can just go right in and get 7 shares or something, or, and I don't move just because somebody else may have made a decision to buy or to sell. My friend Kelly, who's also part of this group, sent me a text today to hurry up and buy something, and I just looked at it, and I didn't. She actually told me to go buy Solo, and I was like, man, I'm not gonna do that right now.
Right.
And I'm just looking at it. But she was the one who told me about Neo when I got into it at $6.
Yes, ma'am.
So so can I sell at a loss? I'm not there. I need to watch it, and I want to see it climb a little bit. And if I don't never see it climb, then maybe I will go ahead and take that loss, but I'm not there yet. Okay. So that's where I'm at right now. My mood is easy. I'm easy. I talk to Kyle all the time. I probably bug him sometimes, but I'm easy right now.
Okay, good.
Yeah.
Yes, ma'am. Appreciate that.
You ain't bugging me. Stop that.
Yeah.
Told you I would stalk you, Kyle.
Oh, it ain't about that.
Lord.
Together.
Right. So I will say, so here's a question for everybody. What hurts more for you? Regret or fear of missing out? Meaning that, so let's just take the example that Angela just gave. So Kelly told her to buy Solo. I just so happen to know that another friend of mine, he bought Solo and he's done well in it, I think the last couple of days. I did not buy it, but I'm okay in using this as an example of not being in that particular stock. Whereas I know other people, if they get a tip and a stock just runs away from them and they're not in it, there's a lot of regret associated with that. So, I think it's an incumbent upon all of us to understand do we operate on the fear of missing out principle? Or let's say I had bought solo today and then it was down 30%, and I would actually have some actual losses there, or at least some paper losses and if I sell, they'll actually turn those into actual losses. So which of the two emotions drive me more? And that, and that's a question for everyone, just not me, but what emotions does the fear of missing out drive you more, or does the feeling of actually being in something and having it down drive you more?
Neither one for me. I think only regrets I might have with a lot of stock. You can't be in everything. Mm-hmm. You got to be disciplined to stick to your game plan and figure out what you want. You can't be in everything. Only maybe groups like this give you like some heads up on some stocks you never looked at. I just looked at solo like right now and I see what somebody saw and it's like, okay. But I have my own indicators that I go through before I buy something anyway. But if I wasn't in a group like this, I never would have heard of solo. Yeah. But only regret I have is maybe not buying as many shares at the beginning, maybe. But even you taught me, Mike, like, I didn't realize if you missed the entry, if that stock's still going up, you can still buy it going up. And your stock purchase price might change, but you still in it and got more shares. And I never realized. I'm like, oh man, I bought it at 9, now it's at 14. I want to buy some more, but I wish I'd have bought more at 9. But you still can buy some at 14, and then everything kind of merges, and it basically the price goes to like maybe 12.25 or something when you add them together. Right. I was like, I didn't realize that all these years. Mm-hmm. Mm-hmm. I thought I missed the boat. So you taught me that, and I really didn't know that. You kind of made it seem like, okay, I sold all my shares, and then I went back in and bought some more. And it was like, I didn't have to sell them, just buy some more while it's still going up. So it's a learning lesson. And I even did that like with Neo. I went back and bought it back and bought some more shares.
Yeah, I'll show an example of that on once we finish this and go to a chart, because I actually had that same type of scenario happen to me just this week, and so I'll show you. Christian, what about are you a regret person, or do the actual loss of something hurt worse? Where do you fit on that scale?
Definitely the actual loss of something, because I've been missing out on a lot of stuff all my life as a PK. So let's be honest, because I'm using this as like a metaphor of my life, to be quite honest. So I'm just like, it's more so if I actually lose money, like I'm livid, because I can't do that. Like I work too hard not to be losing money to try to, figure out what's going on. I'm looking at, all these different factors, looking at what's going on here. So I can miss out on something if there's going to be a long-term payoff better. So, and that's how I look at it.
Got it. Angela? Did we lose Angela?
No, I couldn't get my mic to open up.
Oh, no worries.
The fear of the loss part doesn't hurt me as much as I wish I would have got in on something maybe when it was said. But ever since I had that last Zoom with you and you were showing how to look at the support and the resistance, and and then also Kyle always said you gotta read the charts and look at the 52 weeks and all that stuff. It made me look at things a little differently. So I think Kelly did a good thing by telling me about Neil when she did, but I was watching Solo today when she said do it. She told me early, and when I first looked at it, it was at 10 something.
Okay.
And then when I looked at it again, I saw it go to 11:50 something. I was like, oh, well. I was thinking, oh, whatever. I said, I'm going to keep watching it, And then I'm looking at it, it's back at 10. So I'm okay, And then I was disappointed with, I think it was ACB. And I had bought it. I remember a lot of us was jumping on it when Kyle was first introducing our group into getting into it. And it was like 14 is when we bought it, around $14. Mm-hmm. And then it fell down to even $3. And I was like, that's some bull. And so, so it started to go up again. And Kyle was like, I think it went up to 11. And Kyle was saying, yeah, if you buy it, then it will even itself out and, the price will change. And I was like, oh, okay. So I did that. So it's not doing well, but I'm just going to let it sit there. And, other things are doing well. My brokerage account has increased in value, and I really have not added any money. Okay. I've just moved stuff around. Mm-hmm. That's impressive to me.
Yes, ma'am.
And I've told people that, money has cousins and sisters and brothers and aunts and uncles. And this is the most impressive and the most I've seen ever in my life. So okay. I like this. This is learning process. I've been doing this for a while, and I'm glad that I'm learning stuff with you guys. You guys are teaching me a lot. So that's where I'm at with that.
Yes, ma'am. Yeah, that's good. And it's actually kind of wrong. I'm going to back up a couple screens here. I want to show something. So we talked about in terms of our, what our overall goal is. And I have kind of like a unstated goal, and I'll share in a second, but say the goal is to learn about investing in the stock market, practice what we've learned, and share experience with others, about our investing and trading. But I tell you that my main goal for even doing this is that, I want everyone to number one, gain an understanding about this investing, learn about money. But the real long-term goal for me, for everyone, is I want everyone to become a lifetime investor, regardless of whatever asset class. We're talking about stocks now, but you all may find other asset classes that work for you. You may get involved with other groups or other people that expose you to things. But I want you to have your mindset around being a lifelong investor. That's really my goal for everyone. Hey, Kill. And so that's really the piece that I want everyone to kind of walk away with, and just know that, hey, 10, 20, 15, 50 years from now, however long, Lord bless you with life, that you want to be in, you want to have the mindset to say, hey, if an opportunity comes up, I've been investing in trading or looking at opportunities, and I'm accustomed to evaluating and then having the right mindset to be able to participate in some shape, form, or fashion. So that's really what I want us to be able to achieve kind of long term. So, Kiel, we were just kind of going over some of the psychology of trading and investing. And so we're just going through, knowing who you are, fear, greed, mental state, making quick decisions, execution, your mood, and then are you a person that, lives with regret in terms of when, if you miss something that somebody told you about or you've identified and it runs away from you, does that hurt more, or does actually having losses in something that you got into and it went the opposite direction? So kind of just give us your take on these two categories of things.
What's up, bro? as far as if I heard the question right, Mike, as far as the emotions of it all.
Yeah, just emotions. So let me. Well, I'll probably ask you because I know I'm just kind of putting you on the spot. So let me just say, so Kill trades Forex, foreign exchange. That's what he does primarily. But in that, he reads charts and all of that. But and so I would ask you, Kill, from a psychological perspective, kind of what are the emotions that you go through in trading? Because Kill's more of a short-term trader than an investor. So what are the emotions that you go through, and how do you kind of manage those emotions based upon a typical session or typical week or a typical month?
Well, so first of all, you got to disconnect yourself from. Well, disconnect the emotion from the money aspect. So first of all, obviously, I don't know who's all on the call, but money is a very important thing to all of our lives. So investing our money, short or long term, we're naturally pretty attached to it. So, but when investing, it could be $1, it could be $1,000, it could be $100,000. What I've learned in psychology, we all consider it the same. If you invest $1 and you lose it, you feel pretty bad. But especially if you lose an amount that is in your range of livelihood, maybe $150, is a light bill or whatnot, or whatever. $150 to some people is nothing, but $10,500 is something. So I'm just kind of privy in that is that you have to disconnect yourself from the loss of what is important to you. $1, $10, $10,000 might not be important to you, but $100,000 might hurt a little bit. So where am I going with that? You cannot over leverage. You cannot over invest what you're not willing to lose. Investing is a risk. Even long-term investing, whether that's mutual funds, whether that's 401ks, whether that's CDs, something really that's secure and safe, Fed bonds or whatnot, all these are, safe houses, but at the same time, is a risk, right? So you can minimize or you can increase that risk as much as you want, depending on what vehicle you're trying to invest in. But the bottom line, especially in stocks, foreign exchange, like Mike said, that's what I primarily do. Foreign exchange is very short term. So, and stocks is obviously a risk to lose it. You got to be willing to lose that money. So would I say that to say, how do you disconnect your emotion from the loss potentially? Just don't invest what you're not willing to lose. So a lot of people, what I found in my experience is that a lot of people try to get rich overnight. So they find a method, they find a particular stock, they find a particular crypto, they find a particular, strategy, technical analysis on the charts or whatnot, and they go all in. And the odds are stacked against you, so 9 times out of 10, people are going to lose everything they went all in on because of whatever shiny object strategy that they thought that was, was a sure shot. So if you got $1,000 and that's, you got $1,000 to your name, hypothetically speaking, only invest 10% of that. Okay, I'm going to invest $100. If I lose $100, it's not going to kill me. If I double, if I make 100% on my investment and I come out with $200, then, hip hip hooray. And you live another day to do that again. And so even my short term, so, Mike knows and probably Kyle too, like I may trade, at this point, I'll trade no more than 5 times a day. Where I used to trade 100 times a day, chasing trades, but now throttle down more strategic and accurate trades because now my emotion is not in it. And where I was going with that is that man, I lost my train of thought right there. But so the I guess the main point that I'm trying to make is just don't over leverage what you're trying to invest. Oh, what I was going to say is the short term trades. Even I consider myself a scalper, if you will. So I scalp. I risk a lot in my scalp, short term trade, as opposed to a longer term. And it might be nothing to some, but a lot to others. But I increase my risk for a bigger gain on the short term. But the bottom line is I'm still a long term trader from the perspective of if I lose that trade, I stop trading for the rest of the day, maybe even the next day. I erase all my charts, my technical analysis, my fundamental, my sentimental analysis. I clear the slate, find out where I missed it, and then I come back for another day. So that one trade, I didn't over leverage my account. I may lost a couple $100. I may lost $1,000, but it didn't blow my account. I don't have to stop and try to regain capital and increase my account again. And, I got to, go back to my day job and try to save some money. No, I didn't blow my account. I'm still in the game. I just need to reassess my analysis. And with that mindset, man, it's still a long-term mindset. Ultimately, let me know, Mike, if I'm rambling, man, and I just jumped on. I'm just talking. But, yeah, ultimately, we're all here, at least I'm here, to be a full-time trader. So I got a very good IT career, and I've had it for years. I'm not going to throw it away, but at the same time, I want something different, and I like investing. I like trading. So I want to do this full-time. So I got a goal. My goal is, whether that's stocks, crypto, or trading, hey, if I cap $500 a day in my pocket, hey, that's pretty good. $500 a day, 5 days a week, that's gonna, satisfy my income, just being real transparent. And I know I can't jump out there new, and I'm having pretty good weeks lately, but my initial goal was, hey, let me invest in something that I can make $100 a day. Can I make $100 a day consistently for a month? Monday through Friday, and I don't care what you invested in. If you can make $100 a month consistently, Monday through Friday, for technically 20 days, right? Working, business hours, on a part-time basis, not you full time. That's pretty good, because when you do that consistently, you're going to make $200, $300, $400, $500. You're going to have $1,000 days, because your consistency is now overcoming your emotion. Your consistency, your discipline is now overcoming the psychology, the reverse psychology of gambling. We're not here to gamble. We're here to make intelligent decisions and basically, change our lifestyle. Ultimately, yeah, go ahead, man.
Yeah, I was going to ask you a question. So, in that, so are you more of a fear of missing out guy, or the actual losses, that you would absorb? So, which one hurts the most for you, just in terms of, again, psychology?
Personally, I find no, I'm not a missing out guy. That's for sure. So I was just talking to somebody today, just prime example. I made $500 a day on a slow market, and I went in on a buy on the Dow, and a couple of partners I trade with. I'm in another group, but a couple of partners I was trading with, like, no, I'm gonna stay in. I'm like, look, man, you already up, I don't know, 50, 60 pips, like, bag that out, because I see some resistance up ahead. Well, I'm a ride that resistance. It may pull back. I may get a little drawdown, but it's going to go back up, because my take profit is, blah, blah, blah. I'm like, okay, cool. You ride that, but I'm going to get this $500 in my pocket and live another day. without risking. So what happened was it did exactly what they said. It drew down a little bit and went, and it kept on going up to the take profit. I had no qualms. I was like, congratulations. You know, just I don't know what they was risking or what they were trading, but let's say, you know, they made double what I made. That's fine. But I've been in the trade so many times where it don't go like that every time. Just because you analyze it, it ain't gospel. You know, it'll reverse back. You might get news, you might get anything, especially in real time like I'm trading, market execution. It can go right back the other way. You know, somebody announced something. You know, Tesla this, Apple that, Trump this, Trump that, Biden, whatever. It don't even matter. You know, Donald Trump Jr. just announced he got COVID. He in isolation. You know what futures did just then? Futures dropped. You know, so, you know, and while you're in your analysis and in your trade, I mean, all these things have factors. So to answer your question, Mike, if I'm in the blue, you know, if I'm in profit is profit. Now, when I lose, I have to deal with my personal emotion on trying to get it back right then. Okay. So that's my challenge. So to accurately answer your question, like what I lean on, I'm more of a man. I just lost $1,000 or $5,000 or whatever, or $100. Well, it don't matter. Like I just lost that. Now my day is set to get that back immediately. And that's when I get in trouble. So I've learned so the discipline in my world is to, you know what? That's when I clear the charts. I start completely over. And you know what? I'm just going to let that $100 ride. I'll come back the next day. You know, and that's what I learned to do. But that's my challenge, though, admittedly.
I mean,
yeah.
But those are real pieces. You know, so that's that. And you know, as we, you know, go more, you know, into this, and we're going to look at some charts here in a second, but that's real stuff, you know, and as you're trading, you know, those of you that maybe end up doing some of the short-term trading, you're gonna experience some things like that. But even if you're a long-term investor, there are things that you can have profit on. And say, for instance, if you were in Apple at the beginning of the year, I don't know, I think Apple opened the year at, you know, $300 or whatever, right? When COVID hit, everything went down, right? So if you look in March from January, your entire portfolio may have been down 30, 40%, right? The thing is, what do you do at that point, right? And you know, a lot of people lost a lot of money if they sold and they didn't get back in.
So a lot of people, just on that note, long-term or short-term, it's the same, you know, mentality. You know, a lot of people lose when they're negative and they get scared and they close out their trade. They sell out whatever left on their, you know, whatever the investment that they had. Okay, I'm selling now. I'm bailing out basically, right, because they're down. And it happens on a short term. It happens on a very long term. And what happens is most of the time, something I've learned, patience is just a virtue. Like, I mean, if you just sit there and wait, you might be down $100,000, $200,000, especially on a large portfolio. Like you might be down, $250,000. But if you wait, I mean, how fast? To your point, Mike, how fast after the March drop? How fast did it come back?
Yeah, I'm gonna pull up a chart here. We just take a look at it.
It came back April, May.
Right. You know, it was ridiculous. It was absolutely ridiculous.
That's when you're
stronger
supposed to buy
than
more when it dropped. That's when you're supposed to buy some
exactly.
More when it drops.
There you go, Kyle. Because you know, you just when it's low, hey, go in some more. You know, I do the same thing. Now I do. You know, because I know it's going to come back. It actually went to a higher high after COVID hit.
Absolutely,
which is crazy. And it just went to a higher high not even a week or two ago.
Yeah. But you got to learn that. You got to learn that over time. You got to learn that history with the stock market is always recovered. It's always recover.
Yeah, man.
You got to learn that, and you have to have the patience and and have the discipline. Just like don't panic and sell it. When it drop and hit support, you buy some more.
Yeah. And that's easy to say, much harder.
It is easy to say. It's harder to do. Yeah,
much harder to do. But the thing is, to both of you all's point, the longer that you're in this, and you see these cycles and stuff happen. Now we haven't, nobody has experienced a COVID type event, in their lifetime, but we've all experienced some drops if you've been trading in this market. Now, this was a heck of a drop. This was probably, akin to, what happened in 2007, 2008, right? It was a huge drop.
Absolutely.
But this run from here, where we're talking, this is February 17th to a low of March 23rd. But you see where we got, we've eclipsed that back in August, got higher up to this point, and August 31st dropped back down to this low here, this higher low, September 21st. And now you see we're closing out today right here, higher. So we're at all-time highs, considering that.
We at all-time highs right now.
Right. So if you had sold in this bottom region, only to see all this come back, this was a huge.
You're sick right now. Yeah. If you got skittish and you sold out just because it went down to the bottom like the world was going to end. Yeah. You're sick right now. Yeah. And whoever bought at the bottom, whether they renewed or brand new, they're in the running, man. Even at the higher high, higher highs and lower lows, that's when you buy and sell. Well, at least in my space,
right?
Short term, that's how that is. Short term, that's that support and resistance again.
Yeah, and it's funny. So even like if you could take this chart and just start drawing some support and resistance lines on here. Let's see. My machine worked for me.
So everything adheres to market structure. So you got, I know stocks, they run off mad news and earnings projections and stuff like that, but market structure it still hits market structure. Higher highs, lower lows, right? People call it, support and resistance, whatever you want to call it, whatever strategy you use. I use a different strategy, but it's the same thing. It's market structure. And from a technical perspective, so I'm big in the technical analysis. And all this stuff adheres to market structure.
Yeah.
And everything adheres to market structure. And so I guess you're probably looking at a month view or a weekly view right now.
Yeah,
Mike.
It's a weekly on the features. Yeah. And so so this chart just kind of depicts what happened back in March, and then like I showed what happened since then. It's been crazy. But kind of going back to the thing here is just how do you deal with that if you were in the market at that point and you had a big profit and then you all of a sudden had a big loss? What did you do? Did you buy more at the bottom? Did you hold still, or did you sell out and didn't get back in? Because I sold. I held most of everything, but I sold one stock during that time, and I lost a good bit on that, but I made up for it on some other things, and that was Boeing. That's what killed me. I started buying Boeing in the 300s, and that crap went down to $86. So it hurt, but But it happens, right? You're in this, it happened to you. And so I want to, we're coming close up to the hour, so I want to be respectful for everybody's time. So I'll finish with this. It says, I read somewhere which said, the market is like a mirror. It will show you who you are. So this psychology piece is huge, and kind of getting a handle on it I think is really important. And Christian kind of said earlier when he was going through giving his comments, he was saying, kind of what his disposition is, and that, you know, and I was encouraging him, I was saying that create a trading plan that works well for who you are, taking in these factors of fear and greed, your mental state, how well you are executing, how do you do with fear of missing out, you know, do you revenge trade, you know, how do you do with, you know, actual losses and all of that. But you know, and Keel brought up a good point, because really this whole thing is about managing risk. And I will say this and kind of get ready to end. And that is, if you blow out your account, meaning let's say you start with whatever your number is, you start with your number and you're trading, you're investing. And if you make a series of bad trades and that account goes to zero, you're out of the game. You can't play anymore. So the goal is to manage your portfolio, that you always have capital to continue investing, continue trading. Because if you blow it up and you have no more capital, you can't play. And you'll be on the sidelines until you raise more money to put back in the market and to come back. So protecting that should always be, in my mind, should be your number one goal. And this is a unique market because we've been in a bull run, other than what we just showed on the chart there for the corona, but we've been in a bull run for 10, 11 years now. But if we hit a bear market where we're in a bear market of just going down to 2 to 3 years, which actually happens, a lot of people haven't experienced that, but it does happen. It can shake you, and how you navigate that time is real important, because if, again, you blow out your account, you can't play. So that, to me, that's the number one goal. But also with that, that's the key to longevity. And again, like I told you all earlier, my goal and wish for everyone is that you all become, and we all become, lifetime investors. But that implies that you got some money lifetime. And if you blow your account out, blow your money out, and you can't put back in the market, then you're just going to be, watching from the sidelines. So,
may I ask a question?
Yeah. Yes, ma'am.
When you say blow your money out, are you saying that all your money is tied up in your stocks, or do you?
Yeah. So no, basically your account goes to zero in your stock account, and you don't have any more funds, or it's so small. Let's say, for instance, you start out with a $10,000 account and you lose $9,000 of it. You may be able to play a little bit with that 1,000 to try to grow it, but it's going to take a lot of time to grow that back. And so, but I've been in situations where I've blown out accounts where I've basically ran out of all of my money, and I had to take, a good amount of time off before I can get back into the market, because I had to go work, save up some more money, move some things around to be able to put back into the market, because, the risk that I took was too great for my account, and therefore I had major losses. And so I didn't have the capital to invest in trade that I did at one point.
I heard Akil say, and I agree with him, and I know this is not gambling, but you shouldn't invest more than you're willing to lose. And that's pretty much how I try to put money into the account. And I may just put it in the account and not invest it on anything, and just as long as I have some money sitting there to work with. But I would like to get it to where it's something, I don't know if this is unrealistic, but something I can live off of.
Yeah, and that's a good point, and that's a great goal. And I can say it like this: Keel knows a lot of guys on the Forex side. I don't know. I'll take that back. I know one guy particularly that he can, if he stopped working today, he can just trade his money for a living and sustain himself and his family. He just can't. But there are people in this world that's what they do for a living. They manage their money, and that's their job. I would, and so to have that as a goal, Angela, I think is definitely admirable. But I would say there are people that are out there doing it, so there's a precedence for it. So it's not like that's something that's unheard of. It's
no,
real.
it's not far fetched at all. You just got to set your goals and set your, and when you start being consistent and profitable, set your savings goals and decide, how much you need in the kitty to basically, quit your job and do this full time.
Mm-hmm.
Yeah.
That might be a little bit more pressure too, though. You're doing it for a living. Might be a little bit more pressure until you can build up that bank account for real. Might be a little bit more pressure.
I mean, it is really nothing but a number that you're trying to hit. As soon as you think it's, the water bill, then that's when the psychology hits you and the fear factor kicks in 100-fold. If you're trying to pay the mortgage and the rent with that, then you have. That's why I say, hey, whatever you got in your account, that's what you're willing to lose. You're willing to lose. So anything I trade, I'm not worried about paying the bills. If I lose it all, if I blow my account today, the bills are still paid, and my life and my family, everybody's still cool. But as soon as that bleeds over into your livelihood, then you're done from a psychology. Even if you're doing good, eventually the psychology is going to get you, because now you talking about that pressure card. Now the pressure is too much. And so on the flip side, okay, you have an account that you're willing to lose, but you're not losing it. You're making money. That's the goal, right? You're winning, and you just need to stick to the goal, right? Just like what I've been learning personally, just being real, is I don't have to make $1 million this week. I'm just, as long as I meet my goal consistently, because a lot of people, they hit it big. I mean, Kyle, you see it, you're a gambler, right? You go to the casino, somebody hit for 50 grand and they want to hit for 50 grand every time they go to the casino. Like, no, just, you hit 50 this time, just keep on getting a grand every day you go back. And then the other 50 will come later on, maybe. And then you increase your risk and you make money back on the trading analogy. You increase your risk and you start making more money because you have a bigger account. Yeah. You're trading with their money now. You're not trading with your money. You're trading with winnings. And so when you start trading with winnings, you're on the other side. So it's all about going no. And I guess the word is no greed. Don't be greedy.
Playing with house money.
There you go, Kyle. Thank you, Gamble. You're right. Play with the house money, not with your money. Not with your money. When you start playing with house money, now we can relax. We can, we can breathe. We can take a step back and look at this thing for real, and we can start stacking paper. And then now we can look at those real life goals. Like, you know what? I'm making enough money. I can take care of myself with this.
Yeah.
Let me because Kyle will remember not too long ago, maybe last month, I was worried about paying a bill. I was saying I need some money, and he was like, "Don't you have money in your brokerage account?" And I was like, "Well, yeah." He said, "Well, take some of that." I took $250. And I paid a bill. And like I said, I have not really I haven't added any money. I just added $5 today, which is nothing. But my brokerage account,
and that's fine as long as you have an investment plan. And when I call it a trading plan on my world. So I take out. So I got a just a level on my account that I keep every week. And I take my profits over that level every Friday. I take out my profits, and I move it out and I put it. And I don't spend it all, but I could. I literally move it into my Bank of America account. I bring it out, and some I keep in my crypto wallet. But every week I see some tangible profits coming out of the whole investment Forex, world. You know, and it's about 3 or 4 steps you got to go through. I got to go through to get, but I get my money and I could touch it. You know what I'm saying? And I do that for me every week. And if it's 250, if it's 2,500, it don't matter. You know, that's what you do. And but the goal to ultimately, okay, I'm gonna transition my livelihood. Then you got to start thinking bigger past the bills. I wouldn't get used to paying bills with the investment because whatever you got in your account now, that's what you always have.
Yeah, but what I was but I was just gonna say as an example to what you were saying. You know, I had took that money out and I really didn't replace it. Like I said, I just put $5 in, and my brokerage account is actually higher right now than it was before I took that $250 out. And that was because of, that's like fantastic. And that was because of Neo. And also I have something called Blink. I have that. And I got a couple other ones that's always been doing good. But like that Uber's really doing good and stuff. And you know, like you said, you know, you have to, I lost my train of thought, but it's
gotta have a plan.
Yeah,
gotta have a plan.
It's going up.
Stick to your plan. You know, I literally I went to Staples and got me a dry erase board, and I have my plan on the dry erase board. You know, I mean, I'm IT to the hilt, and I do spreadsheets, I do all that jazz. But no, I have my plan on a dry erase board. I have every trade. You know, I trade less now, so I have I journal every trade, what I did, when I did it, why I did it, win or lose, and then I take out my profits on Friday. Today, I wipe the dry erase boards on Sunday night because the market's open Sunday night. I wipe my charts. I start all over again, and so that's just my plan. And so my goal is I'll take out a little profit, but my goal is to steady increase the account. Because imagine taking 2,500 out when you needed something, or 25,000. You know, imagine your account just that big to do that. And so I'm trying to get my mindset out of, I guess, my daily budget range. You know what I'm saying? We all got income. We know what's a lot of money to us and what our bills are or whatever, you know. Well, I'm trying to get above that. You know, I'm trying to get 2%, you know, like Kyle, you know, make all the money, you know, but I'm just saying, I'm joking, but rise above just the everyday normalcy of what we consider good money. You know, I don't know, you know, like, you know what I'm saying? I know most folks on the call, but some I don't. I'm like, I don't know what y'all consider good money, but I ain't never had, you know, good money. You know what I'm saying? I'm blessed with a good job, but at the same time, like, good money, like, we got to rise above. Like Mike's boy, he said he can quit now and take care of himself just by trading stock. Like, that's some good money. So, yeah. Anyway, it's just, you know, it's hopes and dreams, but it's I guess that's why we're on the call, because it's very real and doable if we stick to the plan and we get over ourselves with our own psychology and emotions.
Keep increasing your financial education.
Well, I definitely appreciate everybody's input.